Welcome back to The Breakdown with me, NLW. It's a daily podcast on macro, Bitcoin, and the big picture power shifts remaking our world. What's going on, guys? It is Friday, June 7th, and that means it's time for the Friday Five. Before we get into that, however, if you are enjoying The Breakdown, please go subscribe to it, give it a rating, give it a review, or if you want to dive deeper into the conversation, come join us on the Breakers Discord. You can find a link in the show notes or go to bit.ly/breakdownpod. Happy Friday, everyone. Today, we are back with another Friday Five, recorded live with me and Scott Melker. This morning, Friday, June 7th, we're counting down the top 5 stories in crypto this week, although as you'll see, some of it's macro, some of it's about roaring kitties. It's a fun one, so without further ado, let's dive in.
Man, I've been absent. Sorry about that. Hope you're doing well on this Friday.
Oh, good. Yeah, well, I came back from consensus with COVID, pretty standard, so...
I have like a 50% COVID hit rate at crypto conferences. Sorry to hear that happened, but that happened to me in Singapore. It happened to me in Bitcoin Miami the first time I got COVID, and one other, I think. Yeah, it's pretty much a guarantee.
Par for the course, yeah. What are you going to do?
Yeah, definitely par for the course. I mean, listen, before we get into the stories, obviously, we got Bitcoin trading around 71,000, which is great. Flat on the 24-hour, but I think the story, as an honorable mention, is that it was 72,000 right before the job report hit this morning. A smashing job report on the first numbers, which when you're living in the upside down means less chance of rate cuts and sell everything, right? So we had an immediate sell-off in Bitcoin and other assets down $1,000 in a matter of seconds because they had estimated 185,000 jobs and they added 272. But then really quickly, people actually read the report and saw that unemployment had ticked up to from 3.9% to 4%, which was Powell's line. So they immediately said, holy crap, maybe rate cuts are back on the table in their minds, and started buying Bitcoin back. And full-time workers were down 625,000 and part-time were up 286K. So knee-jerk reaction, then people read the report, and now I guess we'll see what happens.
On top of all that, obviously the only listening to headlines is one problem, but then we also keep getting these reports revised months later that actually suggest that far fewer jobs than we thought were added, right? So it's like the market's been making these decisions every month on the basis of like stronger than expected job growth, and then the next month they're like, oops, actually it was about half of what we thought. It's wild. And I read a report earlier this week that thinks that the estimates from sort of the first quarter of this year were wildly overestimating. So I don't know. It's very hard to see how much signal there really is in this particular set of data right now.
I'm old enough to remember when that was just called lies and manipulation. So our first story of the day, actual story, is obviously the Biden veto of SAB 121. Him saying that a standard is necessary for crypto innovation. I love that we keep crediting Biden. I think we just need to start saying the White House.
Yeah.
Right. Because I think we know that this isn't actually Biden. But if you dug into the message on why he vetoed this bipartisan supported bill that was passed with Schumer and 9 other Democrats going against party lines, over 70 Democrats flipping party lines in the House, he says, my administration is eager to work with the Congress to ensure a comprehensive and balanced regulatory framework for digital assets, building on existing authorities, which will promote the responsible development of digital assets and payment innovation and help reinforce the United States leadership in the global financial system. Therefore, I'm vetoing this resolution. What?
I think it's, to me, this reads like political calculus outside, above, and beyond crypto. So I think they box themselves into a corner with the veto threat. And I think that right now, when it comes to American electoral politics, the biggest problem for Biden is the perception that he's a walking corpse, which is, if you extract that, is that he's weak, right? It's sort of a variety of weakness. And my guess is that they were concerned that at this stage, them going back on, saying they were going to veto just shows them to be impotent in a way that they weren't willing to do, even though it's obviously a terrible calculus from the crypto vote. But it feels to me like something where they were sort of thinking about the broader political perception implications more than the crypto vote. But either way, it's a weird move. But it was a weird move to threaten a veto on something like this in the first place. This is why would you get the president involved on a thing like this, especially when the GAO is already weighed in? You know what I mean? It's such a strange thing to wade into.
Also, I haven't dug in deeply, but I believe there's a way that this can still effectively pass, even with the veto from something that I read. And that, I mean, clearly he's just trying to say, listen, I'm vetoing this because I want something bigger and better. But we know that that's not the case when you preemptively stated that you would veto this regardless of what happened. It's just a wildly confusing political move, wildly confusing
It
rational move. It just
it
makes no
sh
sense.
it shows a White House that is really out of sync with itself when it comes to strategy. This is not a White House that's firing on all cylinders with a consistent message. This is a White House where I think there is blood in the water for Democrats right now in the U.S. And there is, you're seeing it start to tear itself apart in a way that is unpleasant. I think even if you're on the other side, it's not a good look, and it certainly isn't helping the industry.
Yeah, I mean, it's just quite remarkable to see that crypto has become the issue that has exposed these cracks, right?
Yeah.
On a broader scale. It's really, I mean, you zoom out and think about the fact that this is on the docket is such a issue of focus right now. It's just really astounding. I didn't think that crypto would be this big of a issue coming into the election, or that they would even be trying to pass things in advance of it.
Not to get too deep into the politics of it, and there's no sort of political preference here, but I think that when we maybe analyze it in retrospect, you know, Trump is coming in. He has a very strong base, right? His MAGA base is an incredibly strong block that was never going to be pulled off of him. The question was the middle, right? Like there was a set of people who will never vote for Trump in America. There's a set of people who will never vote for Biden in America. The battle is for the middle. And Trump had a lot of things going against him when it comes to the middle. The fact that, women's rights issues have been set back in this country is a huge issue for a lot of those middle voters. He kind of needed something that was a middle issue that's not exactly partisan, that sort of made it not fall along the same lines. And, crypto isn't about crypto in this campaign. It's about, states. It's about sort of like the size of the government. It's about the control of the government. It's about a thing that I think is more resonant with a lot of those middle voters. So in a weird way, it kind of makes sense that there was that it's resonating and that they're leaning into it.
I totally agree. And yeah, as you said, not to get too deeply into politics, but you said something interesting. I think Trump has a huge base of voters. And as you said, there's a huge base of people that won't vote for Trump. But I don't think that Biden at this point has a huge base of actual supporters.
Yes, I mean
And so,
that's the
so I
hard
think
thing.
he's losing a lot of those in a situation like this.
Yeah. Unfortunately for them, they sort of had, in both Bernie and Elizabeth Warren last cycle, a version of the person who was just really focused on rallying the base, and it just wasn't enough. So I think, whatever happens with this election, the Democrats are poised for, there's some serious reevaluation to be done around what the party stands for and what they have to do. But again, that's sort of for another show.
Right. So listen, let's dig in more, I guess, to the economic side and the macro. We talked about the job numbers, which sort of just came in this morning, so worth mentioning. But the bigger story, obviously, is that the ECB, Bank of Canada, both cutting already. Whether this puts pressure on the Fed or is irrelevant to them, I have no idea. But the world is starting to cut.
Yeah, so there are two interesting signals here, or potential signals. One is what the rest of the world is doing, and then the second is the question about whether it will influence the US at all. On the first part, it's very clear that the world is starting to be more concerned about economic weakness than they are about inflation or the return of inflation. That calculus has shifted. It's official, and they're sort of on that path. The US is comparatively a lot stronger, economically speaking. And this has been a big point of conversation. In fact, even officials in Canada were saying this, that there is a divergence in the strength of the economies right now, and that the US has a potentially different set of calculations as relates to this. So the US already isn't in the business of caring at all what other central banks do at this stage. And I don't anticipate them to start caring anytime soon. But I also think that just structurally, there are some differences. And, I don't think, I think it would be premature for markets to get excited about this as a signal that that Powell's going to do anything different.
I mean, we've been wrong about cuts the entire way. Not we, but the greater we being predictive markets and the assumption that this was inevitably coming, and it just hasn't happened. And every time one of these numbers drops, whether you dig in or not, the headline is always economy strong, job strong, no reason to cut.
Yep.
Yeah. And so my assumption is that we see yet some more pauses, but never know. Could always be wrong. The third story we have today, huge one. Robinhood to buy crypto exchange Bitstamp in effort to expand outside the US. So this is a $200 million cash deal. That's the part that truly struck me. Seems exceptionally low. I was talking to Simon Dixon actually on Spaces yesterday. His company, Bank to the Future, was an early investor in Bitstamp and actually exited 2 or 3 years ago at a $400 million valuation. So it's half right now of what it even was a couple of years ago in the bear market when other investors were able to exit.
Yeah. I mean, I don't know any of the dynamics of the specific deal. Bitstamp has been around forever. They've been around since 2011. I think they're the oldest European exchange. I think there's a bunch of interesting pieces of the story. I think that the positive side is obviously Robinhood trying to get into the European market and bringing crypto services there. I think that's an exciting thing. I think that Bitstamp's infrastructure plus a new infusion of capital and energy that can come from Robinhood is a good thing for European crypto investors, and that should be sort of celebrated and excited. I think that a lot of people's commentary has been focused around, Bitstamp and Coinbase didn't start too far away from each other, and one's worth $200 million right now, and one's worth 63 billion or something like that. And a lot of people pointed to the difference in the sort of landscape of the U.S. from a financial markets perspective in Europe as a testament to that. I don't know if it's quite that simplistic, but it is a low number ultimately. But listen, a lot of businesses have lived for a long time in crypto and then sort of faded into nothing. And the fact that they're having an exit, they're going to a great new home, they're going to a place where everything that they've built is going to get bigger and better, not go away, is a win. I think on a fundamental level.
Yeah, I mean, I know from behind the scenes that Robinhood is on an attempted buying spree, both in TradFi and in crypto, to basically expand themselves into the full suite of financial services. I think eventually they want to be your bank, your broker, your exchange, your everything. And while this deal isn't that huge in a financial, 200 million cash, it's pretty huge for them to gain access to EU customers and certainly to EU institutions, because this is the
Yep.
exchange that they have largely been trading on for so long. Just seems like a very, very savvy move. Definitely good for Robinhood. I'm assuming good for those who sold Bitstamp and chose to take that 200 million, even if they could have gotten more. And I just think that this wraps a nice bow on quite a few things. I mean, people I don't think realize, SBF was invested in Robinhood. Ripple was invested in Bitstamp. Galaxy did the deal. Galaxy just did this deal. There's a lot of players here actually in the Robinhood Bitstamp saga who have been investors in all of these. And this just kind of brings everything to one home.
Yep. Exactly.
So the next story obviously has to be the inflows into the spot ETFs. They're posting their longest run of inflows right now. We're still under an all-time high. And on top of that, we had one of the biggest days in history, 887 million. That was the second highest so far. So Bitcoin spot ETFs getting sort of a second wave here, absolutely ripping. And now it's just becoming, I think, progressively less of a story because it's not the launch and we're not at the beginning. But this is still happening. It's growing. We're getting more institutions unlocked. And now, of course, we have an Ethereum spot ETF to look forward to.
Yeah, it's so funny. No one really knows exactly how to account for this. What's notable is just Bitcoin doing what Bitcoin does, which is totally confound expectations all the time and sort of force you to not view it in the same patterns that you viewed everything else. It's funny watching the ETF observers just have no precedent for 155 days in having the second best day ever with no explicit catalyst. This is just it's going to continue to confound expectations because there are so many pools of capital that could get unlocked at any time. So you have like the normal cyclicality of the asset plus the macro cyclicality that's influencing it, plus random things that are institutions coming online. It's never going to behave exactly, I think, as predicted. And if nothing else, we're making ETFs more interesting.
Right. If we don't have necessarily catalyst or reason for this, how do you explain this sort of record run here that's so quietly happening? I would have to imagine that it's just that same slow unlocks of different platforms and more RAs looking at it and the Wisconsin board. And, next quarter, we'll just get a whole bunch of reports about all these institutions that have been buying these spot ETFs along the way that probably couldn't even because of their risk management and due diligence in the first quarter.
Yeah, my guess is that it's going to be some combination of structural unlocks, right? More potential buyers coming onto the market, plus subtly shifting dynamics in terms of in terms of attitudes, right? So, if let's imagine that you're an institution that got the green light sometime over the last 3 months, right? And so you're able to start allocating, but you weren't exactly sure when you're going to do it. Well, then all of a sudden we've got a surprise ETH ETF approval, which really puts the sort of cherry on top of the shifting sand sundae over here. Well, that sounds like a good time to start deploying. And that kind of lines up roughly time wise as this has been happening. So I don't think it takes some huge catalyst like some dramatic event. It's much more likely to be we were down a little bit. People were kind of probably waiting to see if we were going to go down some more. But then all of a sudden, looks like the government's getting more favorable. There's Fit 21 is passing. That seems like a time to get in because you have to assume that once sensible regulation comes online, it's going to unlock a huge amount of additional inflows. So
Yeah, and simple supply and demand. Any uptick in this sort of low volatility, low volume environment obviously is going to push price higher. I mean, if you're literally talking about 900 million in a day, that's 809 or 900 million of extra buying from ETFs on top of the normal spot market. So
exactly.
price should naturally rise if that continues. I think it could be just as simple as that. I think sort of as a corollary to this story, we need to talk about the hyperbolic huge price predictions as we always do, because a lot of them are based on this ETF buying. This one from Standard Chartered at 150K by the end of 2024, more based on the sort of new positive crypto rhetoric from Donald Trump, and then the thawing, of course, of the Democratic Party as a result of that. Them saying 150K. We got Novogratz saying 100K if it breaks 74K, basically a new all-time high. Blue skies go to 100. But then we have the wild predictions from Van Eck, 22K by 2030 for Ethereum. That's not particularly wild. But if you read the report, what was actually notable and exceptionally interesting about how they came to these numbers, they're basically valuing Ethereum like a tech stock and not like a cryptocurrency or a digital gold or any of the things they've given to Bitcoin. They literally went in and dug into cash flow, projected cash flow over the years, plus the Ethereum spot ETF, and their bull case was 154,000 by 2030. So we got like 150, 100 to 150 by the end of the year for Bitcoin, and then jumping to 2030, 22K, maybe even 154K on Ethereum.
I think there's two categories of number predictions at this stage. There's the far outs, right? Call that the 2030 style predictions. Ark and Kathy Wood always do these too. That it's sort of grounding, and I think that what those are useful as is less price predictions and more, to your point, Scott, methodology experiments. Like they're ways of thinking about how the world might choose to look at this asset, right? They're sort of intellectual exercises that could ultimately influence, sort of the shape of the real world, but they're mostly intellectual exercises. What would it look like if we treated Ethereum, if we valued it like a stock because of the dynamics of, staking and cash flow, et cetera, et cetera. Then you have the second set of predictions, which are, you notice that these 100, the 150, those are actually more restrained than we were getting earlier in the year before the Bitcoin spot ETF, because they are now pegged against more evidence of what we've seen this year, right? So Novogratz talking about 100, that's different than him predicting 100, 6 months ago, because obviously we have a much better sense of information. Same with that 150. It's a lot closer to where we are now. Obviously, that would still be a very exciting number to hit, but I think these are two pretty separate categories of types of guesses, and good for different things.
Yeah, absolutely agree. And to me, it's just really important that they're actually taking a look at how Wall Street might view these things. And when you start to frame Ethereum like an Nvidia or another platform, it becomes very, very different, the sort of prices that you could see down the road. But I guess we'll have to revisit this on a Friday 5 in 2030.
These things are also acts of they're sort of trying to will self-fulfilling prophecy into existence, right? Like part of the reason that you publish these things is to try to get people to think about it in such a way.
Yeah. So I think the other huge story, which is crypto adjacent, is obviously Roaring Kitty coming back, GameStop, everything happening there. And you look at this GameStop chart since it came back, pumped up to $64, way back down to 17, up, down, up yesterday massively. Now trading $10 down pre-market, which will open in about 2 minutes. Absolutely absurd price action, all on the back originally of Roaring Kitty just tweeting a few memes.
Right.
But then he disclosed a massive options call position on GameStop, which now I believe was worth roughly $586 million yesterday. The guy, $500 million position on GameStop. It's absolutely astounding. And now he's back on YouTube in about 2 hours. the stream. Look at the comments going right now on a stream that's happening in 2 hours. Holy crap.
I
Look at
mean,
that.
it is unbelievable the amount of attention around this. I mean, the whole thing was kicked off with just a meme, literally, of a guy sitting up in his chair. This ignited this whole frenzy. There are some interesting things that are a little bit different about this time around. One is that it appears that the apes are a little bit more willing to kind of just watch him do his thing versus all sort of pile in behind him. But it's almost like performance art at this point that's trying to trigger or sort of force the the government to figure out what market manipulation actually looks like. He hasn't said anything about GameStop. There's never been a GME. It's
And you're allowed to share your positions publicly.
Yeah.
There's nothing wrong with saying I have a huge options position.
Exactly. And a million people have pointed out, like, how different is this than, Bill Ackman going on CNBC and, and making his case about why he thinks things are the way that they are. It's all part of the game. It's just people are uncomfortable, or the traditional financial system is uncomfortable with an outsider doing it, and an outsider doing it with the full power of the internet. The big magic number that everyone is sort of, rotating around is, I think, $67 per share,
billion,
and he
right?
gets to $1 billion. Yeah. And he almost touched it last night in sort of aftermarket. It's just absolutely wild. I mean, we'll see what this stream says. I think, one of the big questions is, where did this huge bankroll come from initially? Is it that people have been trying to figure out, was it even possible if he did he have that money himself? I had read that in his testimony a few years ago, he had said that he had sort of made out to the tune of $50 billion, right? So
that's not enough for this position.
No, but that, like, if he went all in, GME, like, 3x earlier this year, maybe that, like, people have been trying to sort of stretch it out and figure it out, but there's a lot of mystery and intrigue on this one. So I think this is going to be, let's put it this way, I would be very surprised if more people weren't watching this YouTube stream than will watch Powell's FOMC speech next week.
By 100x.
Yeah.
by 100x. I think it's just absolutely astounding, exceptionally fun to watch at the very least, even if you're not participating in it, to see what the markets have truly become. And then, of course, as I said, sort of crypto adjacent, this has sparked a major run in meme coins, because obviously GME is viewed as a meme stock, and there's even a GameStop inspired meme coin that went up thousands of percent when Roaring Kitty first came back, now up another 80% here. I mean, it's just bananas. And the honorable mention obviously goes to Jim Cramer, who once called GameStop arguably the worst company in America, says it now has enough cash to become something other than a meme stop. Congrats.
Uh-oh. Well, I guess
so Roaring Kitty is literally going to be homeless by the end of that stream.
Yeah, exactly. If you can't have some fun with your financial nihilism, what are we even doing here?
Financial nihilism it is. Did Travis Kling coin that, or did he borrow it? I think his thread about it was amazing.
I think it was Dimitri Kofinas from Hidden Forces was the first to at least popularize that term.
There you go. See, you're a wealth of historical knowledge. Absolutely love it. All right, man. That's all we got. Friday 5. Glad to be back. We will definitely be back next week, assuming you can make it.
I can.
I will be here next week. Awesome.
I'll be here.
We're gonna get consistent again. The conference schedule with a sprinkle of COVID makes it a little tough sometimes to get these done. Yeah, it's funny because you messaged me. We should have done this live in Austin. I'm glad we didn't, because I would.
Yeah, exactly.
COVIDing myself. Awesome.
Exactly.
All right, guys. Thank you so much for listening. Follow NLW. Listen to the breakdown every day. I know I do. I see all the comments that say, wow, he's a knowledgeable guest. Well, he does this every day about all of the key stories. So he's always on top of everything happening in this market. That's all we got for you today. See you guys next week.
Later, guys.